Good evening, everyone. Again, welcome to the weekly Sequoia commercial lending training. You cannot believe it. March is already here. Bring your eyes, 2 months of 2023 is already gone. So what have we been doing for the last 2 months? And obviously, what are we going to do for the next 10 months? I don't know about everyone out there, but definitely Sequoia is going to disrupt the commercial lending industry from city to city to city. We just came back from Vegas, met with a lot of good friends and a lot of exciting people. And this week, we will be in Delaware. And sometimes by the end of this month, I think we are heading to Denver. We'll be in the Bay Area. So again, we are traveling from city to city to city, and want more and more people to understand what we are doing right here. Okay, so tonight, I will be talking about the how to invest in 1 to 4 unit. But before I do that, I would like to introduce our transaction manager, Francine, to share with us some back end office, because a lot of people join us, they don't know, hey, Alan, how is the back end office work? I mean, besides of you, are there anyone working in Sequoia? Okay, so I'm going to introduce Francine to the floor. So she's going to share with us what does she do in the back end. She has a tremendous amount of experience in terms of processing commercial loans. She used to work for Chase for over 25 years, and it's an honor to have her in Sequoia to overlook our deals. And also, Francine is also our training officer. So as we speak, she is preparing the certification class. And many of you ask us, hey, when is the certification class to come out? So Francine is the one that is preparing that class. She's going to let us know the status of that. Now, just let everybody know. So just to let everybody know, anyone that signed up with Sequoia before the class is launched, you are automatically at 46% commission. Okay, you're automatically at 46% commission. And once the class that comes out, then everyone in Sequoia, you will have, I think it's about 3 months for you to complete that class. Okay, so again, without further ado, let me see where's Francine. She's right here. Francine, can you unmute yourself?
I'm unmuted.
Okay, great, wonderful. So Francine, the floor is yours. Please let us know what you do in the back office.
Awesome. I am the transaction manager with Sequoia, and what it is that I do is not only bring on more lenders that will help us close our deals quickly, but also make sure we're pretty much in compliance with certain things, because we don't want to get in trouble. With that being said, I also am a mentor to several people who are new to this industry, if you will. And once you're new, you have to understand certain intricacies of the business. Not only that, how can you market yourself so you can reach as many people as possible? Because again, as Alan had stated, we are here to disrupt this industry. And we're already doing it, because guess what? We're signing up people every single day. We have people calling the office and wanting more information about who we are, what we offer, how many lenders do we have, that type of thing. So with that being said, I have quite a few people, that I've spoken to as well, who would like to know, well, how do I handle a DSCR? What do I do with something like that? What exactly is that? That type of thing. So I talk them through it. I talk them through the DSCR, and keep in mind, this is something that is going to be in your training as well. It's simplified, and you always have access to me in the event that you have any questions when you're out in the field or you're at home. You can ask Kevin. You can call me anytime. Several people have called me at 9 o'clock at night and had questions. Believe you me, if I'm up, my phone rings, I'm answering it, because I want to see us disrupt this industry as well. Okay, so with that being said, the other thing that I do is when I get a package from you in regards to a loan request, I take a look at that. I look at the lenders that Sequoia has on the books, and we have hundreds of lenders. From looking at the lenders, looking at their underwriting criteria, if you will, just the simplistic things, looking at that, looking at how quickly they can close the deal for us. Is this client's DSCR, equipment loan, et cetera, is this the right fit for this particular lender? Those are things that we look at, and those are things that Alan and I talk about all the time. Another thing that you're going to learn a lot about is points. You know, what points are, you know, and how does that affect your payment? You know, so with that being said, with being, you know, starting out at 46 basis points, that's pretty generous for people that have never worked in this industry or don't know that much about commercial lending. Commercial lending is not number one. It's not controlled by the CFPB, and the fact that Dodd-Frank, and a lot of people have probably heard of Dodd-Frank. With Dodd-Frank, if you guys can remember back in 2007 and 2008, that's when the mortgage industry fell. I mean, it was crazy. You know, there was a movie that came out, by the way, and so several of you probably know about it, and it's called Too Big to Fail, because that's what they thought. That included Chase, Wells Fargo, Bank of America, Wells Stearns, just so many people, and those banks were falling one by one. With that being said, if y'all haven't seen that movie, please watch that movie, and that will help you understand more of the industry. But once that happened, that is, and Dodd-Frank is in relation to a consumer product, okay? And that's one reason you have to have an NMLS license in order to originate a consumer loan. But in the commercial industry, guess what? You don't need a license. You don't need a license at all. But you do need to know a little bit of something. And even if you don't know everything, you can reach out to me. You can reach out to Alan. You can reach out to George. You know, all of us together, I'm sure, have over 50 years experience within this industry. So with that being said, just remember, I'm here to serve you. I'm here to make sure that I get your loans properly placed and closed as quickly as possible, because I actually manage that pipeline. I know who's bringing the loan in to us. Like for instance, right now, we have several loan consultants that have several deals with that I'm working on for them. I have several people. And I definitely want to give a shout out to Kevin. Kevin is on the team of Lisa. I don't think Lisa is here tonight, but I think Kevin is here as well. But Kevin is new to the industry. However, he is a general financial consultant. With that being said, he has just placed one of the biggest deals I've seen yet. So if you think for one moment that you don't have the experience or you don't know a lot, that's okay, because you have Alan, you have George, and you have Francine that have their combined years of experience to help you get the loans closed quickly, and also to help you to understand, what a DSCR is, or, the terms or the types of loans and how they're placed. How should you price that loan? That's one thing I do want to talk about as well, as far as pricing is concerned. In the commercial sector, if you will, most of the time, loans are priced at maybe 3 points. A lot of people are pricing at 3 points right now. But in order to capture more of the market, sometimes it's nice to discount. And I say discount by what? Well, if the loan is, I don't know, 200 million maybe, 10 million maybe, 10 million, we can absolutely get away with charging 2 points. And you can negotiate if you get a savvy investor, you can definitely negotiate down. You can definitely do that, but you don't want to go from 2 points down to 1 point. You want to be a savvy negotiator. You want to go in perhaps 1/8 of a point, that type of thing. But we will talk about a little bit more about that a little further down the line because it's a little bit more complicated. But as far as the class is concerned, the class is pretty much written. And at that, with that being said, where I'm at with that is there's just a couple of tweaks that I wanted to make, and I've been discussing that with Alan. So I would suspect within the next week, you should be able to sign on to the platform and go in and take that class so that you can keep your payout at the 46 basis points. And that's about what I have for you, Alan.
Okay, great. Thank you so much, Francine,
You're
for
welcome.
your introduction of what you do. And again, ladies and gentlemen, just want to let you know that, this is the team that we have. You just hear from Francine. Sometime down the road, definitely you will hear from George also. And not besides of Francine and George, they are the core of Sequoia. Placing the deals, closing the deals. That's the most important. But however, we also have another technical team down in Florida, and they do nothing but help us to keep track of our backend office. The setlending.com website that you got, every single one of you is supposed to have your own website, and they are the one that managing the entire website. And also we have an admin team. The admin team is actually helping us to do the day-to-day administrations. When you have any questions whatsoever, you send it to support@setlending.com. Either Lisa or Katrina, or they are the one that's answering your question. Now, a lot of you asking, hey, can you talk to them? The answer is no, we don't want you to talk to them. It's just because we have so many people sign up with us right now. And if imagine everybody on the phone for 5 minutes, there's no way for them to service anyone. So the best way for you to do for any questions or whatsoever is to send an email to support@setlending.com, and they will do their best to respond to you. And personally, I see this business very, very serious. And quite frankly, this is our baby. So the company policy is that every time when they submit a question inquiry through support@setlending, I need them to respond immediately within no later than 24 hours. So you're supposed to receive an email, and if you don't, please look at your junk box. Okay, and if your client submit anything through the scenario form, either myself or Francine or George or Chris will respond to you. Either we receive the inquiry and we are working on it, or we will let you know what the rate and term is, or we will ask you to provide more documentations. So currently we have so many working capitals, equipment loans, and fix and flips that they're submitted to us. And please, again, when you submit a deal, you will receive an email also from the system. So please keep track of that email. I suggest you to open up, set up different folders that you can keep track of all those inquiries that you submitted in. Okay. So again, just like Francine said, we are disrupting this industry. We don't need you to learn commercial lending. We don't need you to even know how to spell commercial lending. All we need you to do is that, hey, this is a platform for you to use. When you have clients that needs the funding, point them to the proper scenario form, submit something to us, let us take a look at it, and we go from there. Right now, we are funding deals. We just closed a deal of $15,000 2 days ago. Not a big deal, but we closed it in 7 days. The guy is a restaurant owner. He needs the funding very, very urgently. And hey, what does that mean? It means that we can fund them very quickly, and that means that you as an agent will get your paycheck very quickly also. And a lot of people asking us, hey, what is the program that I should focus on? What is the loan that I should focus on? My suggestion is that focusing on something that is low hanging fruit, that you can get a paycheck immediately or within the 30 days. Now, obviously in commercial lending, we also just received a term sheet for $10 million term sheet. But again, that type of deal is not easy. It takes time. Okay, it takes time. But again, that is what we can do from from $5,000-$10,000 all the way up to hundreds of millions of dollars, we have the ability to fund. Now, I have a lot of people asking me, Alan, if I just come into commercial lending, what should I focus on? There are so many different loans that we can do: equipment loans, working capitals, fix and flips, commercials, retails. What should I focus on? And my suggestion to everyone is focus on something that you understand. Okay, focus on something that you understand. And what is this something that everyone understands? It's single family investment property, 1 to 4 unit investment property. Everybody know what it is. I'm sure that a lot of us in this room already purchased a home. Okay, now what is the biggest difference? The biggest difference is that we do not fund primary residence. If you're buying a house to live in, we do not do that. Can we do it? Yes, absolutely, we can do it. But however, in order for us to pay you, you have to have a mortgage license. But quite frankly, if you already have a mortgage license, probably you're already working with someone else, so you don't need us, okay? But however, that is why we want to focusing on investment property only. Now, today, it is the perfect time for you to do 2 things. Number one is for you to build a commercial lending business. Why do I say that? It's because the interest rate has gone up so much since last year. Everybody know. Anybody have any idea what is the prime rate right now? It's at 7.75%. 7.75% compared to 1 year ago at this time. At that time, it was 2.5%. It's crazy. It has jumped up so much. What does it mean? It means that a lot of the bankers are having a hard time to close deals. It means that a lot of the loan officer, traditional loan officer, are losing businesses. It means that a lot of the real estate agent, they are looking for an alternative ways to fund their clients. If their client purchased an investment property, if they cannot close it, it's not going to do any good for them. So this is the first thing. It's the perfect storm right in front of us that you go out there to start talking to people, to have them to come onto commercial lending, build a commercial lending business. And I kid you not, if you capture this moment in life, this is going to be a once in a lifetime opportunity like this. Honestly, it's one in a lifetime. If you can capture this opportunity, I don't know what happened, 12 months later, 24 months later, I don't know. But what I'm seeing today is that a lot of people are hungry to looking for an alternative way to generate more income. And commercial lending definitely is the perfect way for you to get them involved. So that's the number one thing. The second thing for you to do now is to capture all those leads, all those clients that cannot be closed by a traditional bank. With the interest rate has gone up, the capital market has tightened up a lot, meaning that a lot of the traditional funding, their guideline also increased, also tightening up. Used to be a 700 credit score, now becomes 730. Used to be 730 credit score, now it's 780. Used to be that you can fund, they can fund 75% LTV, and now the bank's saying that they can only maximum fund 60% LTV, so on and so forth. Now, this is the time that, again, market has changed. On the traditional side, definitely it's not as easy as before. But however, on the commercial side, a lot of the lenders start to losing up their guideline. Why? Because you have to understand, in the commercial side, that is what their business is. Their business is to lend out money. And many of these lenders that we deal with are private money. They have no other ways to go. Their only business is to lend money. If they don't lend money, their business is going to die out. So again, many of the lenders are actually changing their guideline or changing their programs to fit the market. So today, I'm going to talk about one product. It is the 1 to 4 investment property loan that you can talk to, that you can get involved with. So again, let's talk about the market. Okay, let's talk about the market. So I already mentioned, the interest rate has gone up. It's not the same anymore. Okay. So many lenders are tightening up their underwriting guidelines. And if you don't believe me, talk to any loan officers out there. It's very difficult for them to close a loan right now. And even though that loan is closed, they will look at so many stuff. They will look at your tax return, they will look at your income, look at a lot of different things. And that is why a lot of the people used to be able to get a loan from a traditional bank. They're not able to do it anymore. But investor, now is the time for them to come out actually to purchase investment properties. But where can they go? Okay, if you cannot qualify from the bank, where can they go? Now, who are these people that cannot be qualified by the bank? First of all, is low credit, low income. Now, when I say low income, meaning that on paper is low income, does not mean that they don't make money. A lot of the business people, they make a lot of money, but yet they also write off a lot of expenses. So on paper, it looks like they don't make money, but actually it just write off. But the bank does not like to see that. Okay, so a lot of the people cannot provide their bank statement or cannot provide their financials. A lot of the bank is not going to, they don't like it. Second thing is credit issue. Okay, credit issue. Now, if your credit score is not, if your credit score does not have 660 or 680 or whatever that might be, or clean credit, many lenders are going to turn you down. Okay, so that's another reason that many lenders do not like to, there are a lot of clients cannot, get the traditional loan anymore. The next one is investors. And remember, we are dealing with investors. I'm not dealing with people out there purchasing their first home. That is not our clients. It's not our business. We are dealing with investors out there that purchasing property, 1 or 2 or 3 a year. Right now, I'm working with a client that is purchasing 3 property. She's doing property at the same time, 3 properties. Now, if a client has many property under their name, if you go to a traditional lender, it will be getting harder and harder and harder to get a loan. Why? Because in the traditional side, they looked at one ratio called DTI. If you're a realtor in this room, if you're a mortgage loan officer in this room, you know what I'm talking about. And if you don't understand what this term means, it means it stands for debt to income ratio. So from the bank, what they look at is that they look at what you as a person, personally, how much you bring in as an income. And compared to your debt, how much debt do you have? So the more debt you have, the income, it's based on your job, right? So again, you're not going to increase your income every single year. It's just impossible. So let's say your income is $100,000 a year, and now you're out there keep buying these houses. And guess what? The more house you purchase, the more debt you have. And that when that debt to income ratio is getting bigger, smaller, and you cannot get a loan anymore from a traditional bank. So again, there are so many investors, after they purchase 5, 6, 7 properties, they cannot get funding anymore. They have to come to us. Okay. So another one, it's timing. Obviously, right now, if you go to a traditional bank, if they can do it, it takes forever. It takes 40 days, 50 days, 60 days, and sometimes even get you 90 days to get a loan closed. But how many people can actually wait for that long? You cannot. So timing is very important. Many people wants to close loan quickly. Many people wants to close loan in 30 days, 45 days max. Okay. So where can they go? Now, that is why we come into commercial loans. Commercial loans, in another word, it's called business loans. Commercial loan equals to business loans. So what is the difference between commercial loan? Number one, we do not look at your person's income. We don't look at personal income. Okay, even though you make 100,000, 200,000, 500,000, $1 million a year, we don't care. Okay, that's the first thing. We don't care about your income. What do we care? We care about if you have down payment or not. So the first thing that you need to look at is that, do you have down payment? Now, how much down payment do you need? Minimum 20%. But normally when I tell people is that at least 25% will be ideal. If you can put down 30%, that will be even best. Why? Is because when you get to 80%, can we fund it? Yes, a lot of our lender can fund 80% LTV, loan to value. But again, the interest rate will be much, much higher if you were putting down a lot more down payment. So from 80% down to 75%, that's a huge gap. Okay, there's a huge gap in interest rate. So if they can put down 25%, that would be ideal. But again, down payment, that is another thing that they looked at. Now, and another thing is that as long as you're purchasing this property, not for you to live in, okay, not for you to live in. So that is okay. We do not do primary residence, one more time, but as long as they're purchasing for investment property, you can do 1 to 4 unit, which means the single family home, townhouses, condos, whatever you see. So again, we only do investment, non-owner occupied properties. And also we need you to purchase under an LLC. Okay, you have to set up a company to purchase an under LLC. Now, can you do it under your personal name? The short answer is yes, but we don't want you to. There are reasons for it. And let me show you a few reasons. Reason number one, all of our lenders want you to purchase under an LLC. There's only a few lenders that can allow you to fund under your personal name, which means that if you want to be fund under your personal name, you don't have that many choices. So let's say we have 20 lenders that can do fund under LLC, and there's only like 2 or 3 of them that allow you to do personal fund under personal. So we can only use that 2 or 3, and quite frankly, their interest rate might not be good. So if you set up an LLC, we have so much choices. So that's number one. Number two, it's for asset protection. And again, ladies and gentlemen, this is investment property, meaning that you put a tenant in that property. Now, if something happened inside of the house, guess what? There will be lawsuit. You can count on it, right? So now if that property is under your personal name, guess what? Who are they going to sue? They are going to sue that person, goes to sue you. And anything under your name can be liable. Okay, they can tap into every single your cost, your savings, your retirement, everything that if they want to, they can tap into it. Right now, however, if your property is under an LLC, who are they going to sue? They're going to sue the LLC. They're not going to touch you. They cannot touch you because, again, the LLC is the owner of that property. You are only the what? You're only the sponsor of the principal of that LLC. Now, can a principal change with a company? Absolutely. It does that all day long. And that leads to the next point. The third point that I'm going to talk about is that in the future, when you sell your property, now, a lot of investors or a lot of immature, when they sell property, what do? They just sell the property. Now, when you sell property, what happened? There will be tax transfer. There will be transfer taxes, so many things. But for a seasoned investor, they don't sell properties. Do you know what they sell? They sell their company. They transfer their company. So when they sell the company for that property, are there any title transfer with that company? There's no transfer in the title on the title, but it's just the principle of their company changed. So again, they can save a lot of taxes and so on and so forth. Now, again, I'm not a tax accountant, so I don't mean to teach you how to save tax. So talk to your tax. But again, that is the reason that you need to do it under an LLC. But let me tell you, the main reason that every lender wants you to do it under LLC is for foreclosure purpose, meaning that, hey, for whatever reason, if you cannot pay the mortgage anymore, the lender will be much easier to take that property back than if that property were under your personal name. Okay. So again, set up an LLC. It's very, very easy. It's not that difficult. Anybody can do it. Set up an LLC and purchase that LLC. And we do not even require you to have LLC history, meaning that you set that LLC up today and you can use that LLC to purchase property tomorrow. Okay, tomorrow. And that also means what? That also means that for people that come into the United States, or foreigners or visitors, they come to the United States, they're saying that, hey, I like this project. I like this property. How can I do it? Very easy. All they have to do just to set up an LLC and purchase that property under that LLC. They don't even need to live in the United States. We have done cases where the client is all the way outside of or live overseas. They're not even in the United States, but they set up an LLC here in the United States and purchase that property. And we do that all day long. Okay. So the last but not least is asset protection, which I talked about already. So that is commercial loan. The document that we need is a lot less. Now, do you see anywhere right here we talk about personal tax return, bank statement. Well, of course, we need to see your bank statement, but we don't see your tax return. We don't look at your W-2, none of those things. It doesn't care. But what do we care? Now, I'm going to share with you one of the most important words in commercial lending. I don't care what you do. I don't care you're buying a business, you're doing a construction, you're building a warehouse, you're purchasing 1 to 4 unit. I don't care what it is. In commercial lending, if you want to learn something about this, this is the term that you need to learn, which Francine already said it many, many, many times. It's called debt service coverage ratio, DSCR. Talk about DSCR. What is DSCR? Basically telling the lender what is the cash flow of that property. Now, think about this. The lender doesn't care about you as the individual. What is your income? They don't care about you, but what do they care? They care about that property. Is that property generating any income for you? So that is called DSCR. Now, I'm not going to go into more detail about DSCR. So basically what it means is that the net operating income divided by the total debt service. Okay, so total debt. What is total debt? Total debt including all the expenses that is associated with this particular property, which including what? Tax, right? Property tax, insurance, right? And what? Mortgage. Okay, mortgage. Now, a lot of people asking me, hey, Alan, how much down payment do I need to put down? Okay, how much loan amount can I get? Now, this is called reverse engineering. It's pretty simple. Many lender looking for DSCR, it's 1.1 and above. Now, let's talk about what does 1.1 mean. So if you look at the formula, net operating income divided by the total debt, if that is equals to 1, what does it mean? It means the income equals to the expense. Am I right? So meaning that the property is not generating any income, but yet the property is not losing any money. So that is 1. Am I correct saying that? Now, in the old days, when I say old day, meaning that about a year ago, many lender is looking at 1.1. Now, what does 1.1 means? It means that the property is generating some income. Am I correct saying that? Okay. Now, we can do a reverse engineering. So now I know DSCR is 1.1. Okay. I know what the operating income is. What is the operating income? That is the rent that you are collecting every single month. That is the income. Am I right? Now, I also know what the tax is, which is one of the expense. I also know what is the insurance, right? Now, what do I need to calculate? The mortgage, right? So now from all those numbers, then I can calculate what the mortgage is. And from that point on, I can tell you what is the loan amount. And based on that loan amount, based on the credit score, based on all the profile, then I can tell you what the interest rate is. So a lot of you asking us, what is the interest rate? I don't know. We are not a traditional lender. A traditional lender, you ask me what the interest rate would be, I can tell you that, hey, right now, 30-year fixed, it's 8.125, 15-year fixed, it's 7.725, whatever that might be. It's out there published on the website. You don't even have to ask. But for commercial lending, it's totally different. Now you see why we cannot give you an answer immediately. So we need to see the numbers. Now, where do we get the numbers? Go to your back office. Okay, go to products under 1 to 4 a unit investment property. Enter the information right there. And once you enter all those numbers, we will have the data to calculate that rate and term and interest rate for you. Okay. So now let me continue on. So right now it's 1%, one, DSCR is 1. Many lenders already dropped their DSCR down to 1. Why? It's because they know people purchasing this property are not rookies, are not first-time home buyers. They are investors. They are out there purchasing properties. Okay. Now, we even have some lender is so aggressive to lower their DSCR below 1, and some of them are 0.75. What does it mean? It means that the property right now is losing money. But why do you think that they have the gut to give you the money if the property is losing money? It's because they know few factors. Number one, this is temporary. Okay, this is temporary. It's not going to be a long time. And second of all, you have to put down a lot of down payment. You put down 30%, 40%, and they feel safe. Okay. Number three, the investor has to be a seasoned investor, meaning that they have 5, 10 different 15 properties. So again, the more properties that you have in our world, the better the rate and term would be. So experience is very, very important in commercial lending. So the more property you have, the better the rate and term in commercial lending. So now, what kind of information are we looking for? Number one, we need to know the address. Now, why do we need? Obviously, we need to know the address. That's very, very, obvious, right? But however, there's also things behind it. They want to look at the zip code. They want to see where the property is. Okay, they want to check, is the property in a rural area or is in a city? Now, if the property is in a rural area, most likely they will reduce the leverage, and sometimes they might not even want to fund it. Remember, we are in commercial lending. If somebody's buying a single family home in the middle of nowhere, their neighbor is like 20 miles down the street, why in the world would you buy a property like that for investment? Nobody will feel comfortable. Am I right? So again, they will want to see where that property is. And also, let's say if the property is in Detroit, the property is in Boston or Baltimore. Now, again, those areas are actually, to a lot of the lender, is considered to be risky area, and many of them will either the interest rate will be higher or the leverage would be lower, so on and so forth. So obviously, give us an address. Now, we also run into a lot of scenario where the client's saying, "Hey, I'm just looking around. I don't know where am I going to buy yet. Okay, can you give me a rate and term?" So in that case, please at least give us the zip code so we know where you're buying. So that is, at least that's the number one thing that we need, is the address. Number two, we need to know what the market value is. Okay, we need to know what is the market value. If you're purchasing the property, what is the purchase price? If you're refinancing the property, what is the estimated value? Now, where can you check? If you want to learn about commercial lending, one website is very good. It's called Zillow.com. Go to Zillow, punch in the address, and you will have an idea what that property value would be. Now, give you another example. Somebody is purchasing a property for, let's say, $300,000, but that property actually worth about $400,000 because he got a good deal, and it happens all the time. Now, how can we fund? Do we fund based on 300 or based on 400? A lot of people would think that, well, I mean, I'm buying it for 300, the property worth about 400. I got $100,000 equity in there. So can I count that $100,000 equity? The answer is, unfortunately, no. So they only fund you based on $300,000 because they want you as the investor to have skin in the game. Okay, they want you to have skin in the game. All right. Now let's do another way around. Let's say in the hot market, I don't think it's going to happen today, but about a year ago, okay, people are beating up the price. So let's say you're purchasing a property for, let's say, $300,000, and the property actually worth about $250,000. Okay, now in this case, the lender will fund based on $250,000, not the $300,000 that you pay. So basically means that you have to come up extra $50,000 cash for purchasing that property. So just to let everybody know what's going on out there. Now, the next thing that we need to know is the market rent. This is very, very, very important. Now, if you don't know what the market rent is, ask the homeowner or ask the listing agent, whoever that might be, right? So we do need to have a market rent. Now, whatever you provided to us, we can only use that number to price the loan because we have no idea. We don't have time to do research for you. So when you are doing a purchase, make sure that you talk to your agent what is the market rent for that area. The agent should know. Okay, give you a range. Let's say the agent range come back saying that, oh, 1,600 to 1,800. Then we use 1,600. Okay, now if somebody's saying that, okay, I'm doing a refinance, the market rent it's 1,800, but I have a contract, I have been renting it out for 1,900. Yes, in that case, then we can use the 1,900 to price the loan. All right. So again, market rent, it's very, very important. Keep in mind, once we provide you a rate and term, that is not the final rate and term. That is just only a soft quote, because we don't know what the actual number would be. So we still have to do an appraisal. Now let's talk about appraisal. If you are just on the residential side of it, if you're getting an agency loan, when they do appraisal, they only have one number, which is the as-is value of their property. Okay. However, come to commercial lending, we need to look at two numbers. The number one is the as-is value, just like the other side, but also we look at one more number. What is it? It is the market rent of that property. So let's say somebody purchasing a property is vacant. There's nobody living in there. How do I know what the market rent would be? Obviously, you ask the agent give you an estimate what the market rent would be. Now the appraiser goes out there to do an appraisal, comes back with the actual market rent. Now the lender is going to use that. So let's say if the agent give us the number is $2,000 a month for rent, but the market rent came back at 1,800. So now we use 1,800. Now, since the rent, which is the income, came in is different, what happened? The loan will be different. The loan number, the loan amount will be different. The interest rate will be different. So again, when we provide a soft quote, we always tell our clients, this is just a soft quote. Okay, we are not going to lock in this rate. There's no way we lock in this rate. Unlike the other side of the business, we do not lock in this quote until we have done the appraisal to understand what the number will look like. So that is that. Now, the next thing that we need is obviously insurance and taxes. I talked about that already. Last thing we need is credit score. Okay. Now, what kind of credit score we need? Obviously, the higher, the better. Now, in a rule of thumb, we want somebody to have 660 and above. Okay, 660 and above. Now, coming from the commercial side of it, let's say somebody have a very, very bad credit. Let's say 500. Can you still do a loan? Yes, possibly. But I might not. You don't count on 80% LTV. Probably I'm going to give you 30%, 40%, or maximum 50% LTV. Okay. Don't count on low interest rate. The interest rate probably for something like this is, 10%, 11%, 12%, 13%. It could be because again, when you have a bad credit, it's not a favorable candidate to our clients. So if client have bad credit, my suggestion is that fix the credit first. Okay, fix the credit first. It's going to save them a lot of money. And we do have that credit service in our portal. All they have to do just to fill out that form, and we will have our one of our partners to reach out to them. So those are the 5 numbers that we need: address, market value, market rent, insurance and taxes, and credit score. So if you give us this 5 pieces of information, we will be able to provide you a rate and term. And that is why when you go to the back office to fill out that scenario form, every questions in that scenario form is designed for this to calculate the DSCR. All right. So now what is the guideline? Guideline is this. Number 1, we need at least 640 score and above, right? Could be purchase, could be refinance, purchase. We can do up to 80%. If it's cash out, 70%. Sometimes I can push up to 75%, but I don't, want to give too high a number. So 70% for cash out, and rate and term, it's about 75%. Okay. So application, very easy. Who can use this type of loan? People that cannot show income. There are a lot of business people cannot show income. Okay, so this is one of your good candidate. Now that is the time that you need to talk to your realtors. Let them know, hey, if you have a client purchasing investment property, they're having a hard time to dealing with the local bank, try us. Our processing is much, much faster. We need a lot less document. But the drawback is that they have to have enough down payment. All right. If they only have like 5%, 10% down payment, don't even bother. Foreigners, definitely, it's a very good good group of clients for you to tap into. Portfolio loans, a lot of people that have so many different type of they have so many different property already. Put them together, bundle them into one loan, a portfolio loan. Airbnb, short-term rental. Yes, there are a lot of lenders now. They can, if you're purchasing an Airbnb, they can come out here and do it. Now, let's talk about Airbnb for about 2 minutes. So Airbnb, if that property already running Airbnb and he or she wants to do a cash out or refinance, now we need to look at the last 12 months of Airbnb income to use that to calculate the DSCR, because normally Airbnb, the income is much higher than a traditional rent. Now, if you are buying a property and would like to run Airbnb business inside of the property, at that moment, we can only use the market rent because we have no idea what that property can run for or can generate income as an Airbnb yet. So that is the difference, okay? We can definitely do multi-families, again, 5 unit and above, and also bank turn downs. There's a lot of bank turn downs right now. So that's why right now is perfect timing for you to partner up with mortgage loan officers and insurance loan, and realtors and bankers. They can give you a lot of loans, okay? Now, so this is commercial loans for 1 to 4 unit. It's not that difficult. You understand it already. There's a lot of needs out there. So my suggestion is that go out there. If you don't know anything about any other product in commercial lending, at least focus on something like this. This type of deal can close in about 30 days. All we care is to look at the appraisal. In some cases, we don't even need to look at appraisal, but of course, the interest rate will be much, much higher. Okay. We just funded somebody for $300,000. He needed the money very, very quickly for his other business. So we funded him about $300,000, 10 days funding, no appraisals. All we need is just clear title and insurance. That's it. We can definitely do that. So in the commercial lending space, there's a lot of flexibilities that we can provide to our clients. Now, obviously, the drawback is that the interest rate might be a little bit higher, well, depending on what you are talking about. As a matter of fact, if you're just talking about a good client that has, good credit score, the interest rate, it could be better than the bank, because right now our interest rate starts at 7%. Many lenders out there already at 7.75%. Okay, so however, many clients come to us. They are not a paper lender. When I say a paper lender, means that they have good income, they have good credit, they have good asset to show, everything's clean. That is a paper. But many of our clients is not like this. Many of our clients are business owners. Their credit might be challenging. They might not have income to show. Their money is all over the place, so on and so forth. That is the service that we provide. We are not here to sell interest rate. We are here to sell a service. Is to provide a consulting service to our clients to see what they have on the table and what we can do to put the loan together for them. So this is 2 different type of loan. Commercial loan versus residential loan are 2 different type of loans, just like 2 different cars, right? EV cars and a gas cars. When you're purchasing a gas power vehicle, it costs you approximately $36,000 on an average. But if you're purchasing an EV electrical car, on an average, it's about $55,000. Why is it so expensive? It's 2 different platforms. It's 2 different technology. Same thing with commercial lending. The traditional lending, they looked at a lot of things. It takes a much longer time. That is the trade-off for you to get a good interest rate. But for many of our investors, they cannot wait that long. They don't have a lot of things to show to the bank. They come to us. The trade-off is that, yes, they might have a higher rate than the bank, but guess what? To a lot of investors, they're not just looking at the interest rate. They are actually looking at the deal. If you're purchasing the deal correctly, you already make money by the time that you purchase that deal. Okay. So again, ladies and gentlemen, this is what 1 to 4 investment unit is. It's very, very simple. And quite frankly, because we are dealing with investment property, we are doing commercial loan, there's no licensing needed. And you can do this thing all over the place, all over the United States. It does not matter where you are. So that is my presentation. And I hope that you can understand a little bit about what 1 to 4 unit is all about. It's a perfect timing for us to go out there to build this business and to have more and more people know what we can do, what kind of power that we have, what kind of access that we have. So without further ado, this is the end of my presentation, and let's open up the floor. If you have any questions or whatsoever, we have about 10 minutes before we hit 9 o'clock, and I don't want to keep everybody too long. So any questions? Feel free. If you have questions, yeah, go ahead, Robert. Go ahead. And...
Real quick, great presentation. I love it. Just curious, if you've done one lending with Sequoia, is there any discount or better interest rate for the following subsequent loans? And what kind of volume would we require to get a better loan to value?
Well, again, we treat everybody is the same, right? When we go out there to provide an interest rate, we care less if you are Sequoia agent or not. Now, if you're yes, the answer is yes. So for example, the lady that is purchasing 3 property with us together, we can negotiate with the bank to have them to give us a better interest rate. And because our volume to a lot of different banks, and we know them very well, we can even call them up at midnight. They are willing to do whatever they can to compensate us. But again, they have their rules and guidelines also, because understand one thing. Once they fund the property, they don't keep the loan. 99% of the time, they don't keep the loan. What do? They sell it to the third market. They sell it to the capital market. And if the interest rate is too low and is not making any money, they cannot sell it. So they have their bottom line also. Now, can we negotiate? Yes, but the reality is this: because we deal with them for so long, whatever the rate that they give to Sequoia, they already give us the bare bone rate. So they don't want us to go back to negotiate, and I don't want to go back to negotiate with them neither. So whatever the rate that they provided to us, it's already the best rate. And better yet, because when a client comes in, we normally shop between 3 to 5 different lenders, and we have them to compete with each other, and we can see what their rates are. And quite frankly, many times they come back very, very similar. It all depending on, at that day, what do I feel like and which lender I would like to work with. Then I will submit it to that particular lender. So again, the negotiation room is not that much, honestly. But can we do it? Yes, absolutely. I mean, we can probably have them to lower their points, lower their fees, things like this. So hopefully I can answer your questions.
That was perfect. Thank you.
Yes, sir.
Do you also have the ideal criteria for the type of property or price range, or you just diversify?
No less than $100,000, please. Okay, less than $100,000 is very, very difficult to find find loans for it. Okay. Next,
is there a maximum?
Maximum for single family home, maximum is about $2 million. But now, if you go into the ultra luxury range, like 4 million, 5 million, we have done one. The biggest one that we have ever done for a luxury home is about $6.7 million for a single family home. But you need to, justify who is renting that home, because again, that is an investment property, right? So not many people is buying on a day-to-day basis, purchasing a $6.75 million investment property. But it happened to be that property is actually in I believe in Tampa, Florida. It's in a very luxury place, and the guy that actually renting that property is actually a corporation renting that property for their company functions. So again, that makes sense. George, I see your hands up.
Yes. Thank you for calling. Thank you for the presentation. It was fantastic. I had one of my loan officer friends from Hawaii on the line here earlier, and he texted me. He said, "Hi, Jorge, this program may not work in Hawaii as our price points are ridiculously high. And even with interest only, the debt isn't serviced." We have access to some of these programs a couple years and have only closed one loan total. The only properties that would qualify are Airbnb, but those are typically condo hotels without full kitchens, which most lenders typically don't accept.
Okay, so which type of program are they talking about?
The DSCR loans, I believe.
Yeah, unfortunately, we are commercial lenders. So now we do have something called no DSCR.
No
Ye-
DSCR, okay?
And you know where's that going to lead to, right? So no DSCR, what does it mean? It means that some of the lender do not look at the income. Now, lender fund no DSCR is very, very picky because they
Mhm.
don't care who's living in there. They don't care about none of these things. Obviously, number one, interest rate will be higher, right?
Mhm.
Second of all, they are very picky about properties. They don't want property in a very rural area. They want property in hot places, either in the major metropolitan area, things like this. So
Mhm.
definitely it's case by case basis.
Okay, thank
So-
you.
But we do have that option, right?
Okay,
Now, if they are willing to go into bridge loan, yes, we have that option also. So bridge loan meaning that it's a short-term rental, short-term loan.
Yeah,
Will
sure.
last for about 12 months to 24 months, interest only. And there's another option too, interest only. We don't have to give them an amortization loan. We can give them an interest only loan that can increase the loan amount. So there are many
Okay.
different ways that we can play around.
yeah, so there might be some options, is basically what you're saying.
Yes, sir.
Okay, awesome, thank you.
Okay, absolutely. Can you finance condo? Can you finance a condo in Canada? Unfortunately, we don't. I mean, I know recently there's a lot of people asking us about Canada. The only type of funding that we can do outside of the United States, it's real estate related commercial properties. Single family home, the loan amount is too small for us. So if you're talking about Canada, we need to see a loan amount at least $5 million, but it has to be commercial. For example, multifamilies, retails, warehouses, things like that. If you're talking about Europe, you're talking about at least 20 million and above, so on and so forth. So right now, honestly, we are looking for lenders that can do funding in Canada for much smaller loans. But it might take some time. So let's focus the market here in the United States.
Hello, the Monsieur Akinsi. Can you hear me?
Yes, sir. Go ahead.
Yes, sir. Yes, sir. Yeah, thank you so much for the presentation. A couple of general questions. I heard a couple of things about the classes that you have. I want to know the price point for the classes you're having it. How long is it? The second question is, I heard something about 46 basis points, and that's what we can receive. So in layman's terms, what does that mean in actuality? Is it like 3% of the loan amount, 2%? What does that really mean?
Okay, so again, the first question, you're saying that it's can you repeat your first question? I can hardly hear it on my end.
I'm sorry. The class, I think I heard something about a class that you would have to take in order to join the program. I wanted to know what was the price point for the class. The second question was your 46 basis points. I heard that mentioned too, that we would receive that if we were to close the loan.
Okay, so he's talking about the certification class. Okay, certification class. Right now, we are designing that class. Now we don't have a price point yet. Okay, so once we have it, we will announce to the team. Again, it's not going to be because right now we still need to hire people to come in here to do the video and things like that. So we don't even know what that price would be. So once we set it up, we will let the team know. 46 basis point. If you are actually sign up with Sequoia, our comp plan is this, that if you are just a referral agent, meaning that you just throw us a deal, you don't want to do anything, or in the future, you never take the class to become certified to do loans out there, we will pay you 23% or 23 basis point. What does it mean? It means that 23% of what the company makes. Give you an example. Let's say we do a loan for $1 million and we charge 1 point. So the total commission that come into the company is $10,000. So if you just as a referral agent, we will pay you 23% of that $10,000, which is $2,300. Now, if you take the class and certify yourself and know what's going on out there, how to talk to your client, we double your commission from 23% to 46%. That's what that 46 basis point means. 46% of that 10,000, which means that you make $4,600. Okay. Anyone else? I have a house for 600 to 800 that will make about $100,000 a year in profit in Airbnb. They are investment property. Do they qualify long-term rent? Because if lender must foreclose it, they need to see what rent they. Okay. So again, I mentioned it to you already. Yes, Robert. So if you are Airbnb, as long as you run the property for 12 months, we need to see the last 12 months your Airbnb income, and we can use that to qualify the for the loan. Yes, definitely we can. I have to sign up. Okay, Francine. Okay, Francine's gone. Okay. Can the LLC's credit score be used? The short answer is no, because all these property are, are guaranteed by the principal. So we do need to look at the principal's credit score. Now, when does the business LLC credit score come to play? That is on the business loan. Okay, that's on the business loan. So for example, if you're looking for working capital, equipment loans, no guarantee, no asset collaterals, then we need to look at your business credit. Okay, so that's another topic. Often lender also require personal guarantee also from a human, thus they will look at the credit score of, yes, absolutely, that is correct. So when you are at this type of loans, we do need to look at your personal credit, and many of the loan out there is what we call recourse. Recourse means that you as the guarantor of the loan are responsible for the loan, and if the LLC is not paying the mortgage, the lender will come after you for it. Now, we do have lender that provides something called non-recourse loan, meaning that, hey, they don't come after you, they don't care. I mean, again, the interest rate will be higher, the leverage will be lower, so on and so forth. Any prepayment penalty? Oh, yes, that is a very, very good question. Yes, prepayment penalty on the commercial side of it, there's always prepayment penalty, but you can always bite it out. Normally, the prepayment penalty is between 3 to 5 years. It normally works something like 5, 4, 3, 2, 1, meaning that the first year you pay 5% of the loan amount as prepayment if you want to pay them off. The second year is 4%, so on and so forth. But also, there's some lender allow you to buy them out. There's no prepayment penalty, especially for bridge loan. Bridge loan, there's no prepayment penalty. You can pay them off anytime. But for long term, they want you to stay with them for at least 3 years. The credit score need to be individual. Yes, absolutely. Can you finance mobile home park? Mobile home park. Now, are you talking about just the land, or are you talking about it's mobile home on top of it? If it's a mobile home, now we need to see what is how the mobile home is structured. If the mobile home fixed to the base permanently, we do have some lender that is willing to do it, but quite frankly, a lot of the lender do not like to fund mobile home, because the reason is a lot of the mobile home is actually built somewhere else, like in a factory. They cannot look at the quality of that mobile home. But versus if you are strictly ground up construction, they can send some inspector out there to look at the quality of the build and to look at every single phase and so on and so forth. So a lot of our lender do not like to fund mobile homes, but there is possibility. But if you're talking about a park, basically it's a piece of land. I'm not sure if you're talking about RV park. There's somebody that comes in, park their car there, and park their home there, and they leave the next day, things like this. But the short answer is that yes, we do have funding for something like that also. Can you find lender that require less than 40% down payment? Yes, absolutely. We have a lot of lenders that can do 20%. Now, the down payment, as I mentioned, is not based on the lender. It's based on the property, based on DSCR, based on how much income that the property generates. 5.0. Okay, good. Can you find lender that? Okay, yes, I answered that question. Okay, I think I answered all the questions. Are there any
Mr.
other?
Wu?
Yes, sir.
Yes, sir. Thank you again for the first question answer. I'm sorry, it was something wrong with my microphone there, but thank you. My next question is, what can we find out more about your program? Because you don't have the actual system set up for the schooling aspect of things. How do we get signed up if we want to take the class and get that behind us? And do you anticipate it in the near future to be within this year that we'll be able to take your class? Or
Yes, the class, as Francine mentioned it to you, she's working on the class, and hopefully the class is going to come out this month. Okay. Now, how do you sign up with us? Talk to the person who invited you into this seminar. So that person, if that person is already a Sequoia member, he or she's supposed to have their own personal link. Sign up under that person. Okay.
Okay, great. Thank you so much. Thank you.
Yes, sir. Yes, sir. Anyone else? It's already 8 minutes past the hour, and I don't want to keep everybody here. If you don't have any questions, and I will finish the call tonight. Anyone else? Going one? Going two? And no more. Thank you, everybody. And we will see you next week. And by the way, we will be in Delaware this weekend, and the address and the event details posted on our Facebook. If you are in town, please come to see us. If you're not in town, if you have somebody in town, please tell them to come see us. Okay, guys? Thank you so much again. See you next week. Good night.
Thank you. Thank
Good night.
you.
Bye-bye.
Good night.
No.